We are coming to the end of another year, and it's always a good idea to kind of take stock of your finances, look ahead to the new year, make some plans. And to help us with that is the New York Stock Exchange's Michael Reinking, a CFA, senior market strategist, who can give us a comprehensive look back at 2024 and some key market events of this year. And then also, of course, looking ahead to 2025. Michael, great to have you here and with me. We're in the same building. So
Hi, Jane. Hi, Jane. Yeah, thanks for having me so much. And it's great to talk to your audience. We have such a big presence in California with nearly 200 kind of listed companies that are coming from that state.
That's right, a huge amount. So let's look back on 2024. Of course, we had an election, huge event this year. The markets had a great year. What would you say were kind of the headlines or most important things of 2024?
Yeah, so when I reflect back on 2024, I think the first thing that comes to mind is just how strong financial markets have been. This is the second consecutive year where we've seen double-digit gains in major U.S. indices. And when you look at that S&P 500, that benchmark index that your audience is investing in their 401ks, right, that index was up over 20% for back-to-back years, for the first time that's happened since the mid-1990s. And that's really an interesting parallel, when you look back at that time period and what we're currently seeing kind of with that technological revolution. Right? So there are four things that I think really help drive that market activity this year. The first of those is that AI revolution. We've seen so much capital spending, to build out that technology infrastructure and data centers, all right, and that is creating jobs, kind of helping the U.S. economy remain, very resilient, right? And we're seeing kind of the consumer that is also kind of continue to be very resilient, despite the fact that we're coming off of one of the most aggressive tightening cycles by the Federal Reserve going back to at least the 1980s, right? And we're starting to now see the Federal Reserve pivot. They've cut rates by 75 basis points since September, right? And that is going to help, kind of Main Street as you start to see interest rates that are being charged on mortgages or auto loans or credit cards, right, all starting to move lower. And that's going to, they're cutting those rates into a resilient economy. So hopefully that'll help preserve that environment. And then as you just highlighted, right, the election was a big catalyst this year, right? We've removed that overhang and we are starting to see kind of optimism, building, especially within the business community with the expectation, for some lower taxes and a pro-growth, business-friendly environment.
Yeah,
so that sets us up for a positive 2025.
Yeah, well, it certainly feels like that could happen. And the election really kind of clarified, I think, where we head in 2025. Are there particular sectors that you're keeping an eye on for next year?
Yeah, so, I mean, as we looked at 2024, right, we saw the biggest beneficiaries were those AI companies that, and I kind of call them the picks and shovels of the industry, companies that are producing semiconductors or GPUs or server stacks. But we've started to see that trade evolve throughout the year. And we're looking at, utilities have performed very well as there's this expectation for kind of an increase in power demand, moving forward. I think that AI trade is going to continue to be something to pay attention to, and I think it will continue to evolve. We're starting to see software companies, benefit, and investors are paying very close attention in terms of how management teams are talking about their AI strategy, how they're using it to innovate, become more profitable, and kind of more productive. And then one other industry that I think is really interesting heading into the new year is financials, right? With this expectation for a pro-growth, business-friendly environment, a potential, kind of more an easier regulatory environment. There is some expectation that we could see a pickup in M&A activity and capital markets activity that we haven't seen for a couple of years. And for your audience, right, that's most exciting to see kind of a pickup in IPOs, right, where it gives the investment public the opportunity to invest in some of this new technology. And from our seat here at the New York Stock Exchange, it's just really exciting to work with those entrepreneurs and innovators and business leaders to help raise that capital to change the world.
Yeah. Now, inflation, of course, has been a big story the past couple of years, and it seems to be very sticky. Are you keeping an eye on inflation next year as an economic indicator? And are there other economic indicators that you're going to particularly watch out for?
Yes, yeah, and inflation has obviously been the big story for the last couple of years, and we've seen that start to moderate. Though we're all still feeling kind of the cumulative effects of that inflation with high price levels. But as we look forward, I think we'll continue to pay attention to that inflation. But from my perspective, the most important pieces of economic data really come in the way of the labor market, right? Because as people have jobs, right, there continues to be this propensity to spend, right? And in the U.S. economy, that consumer spending and that domestic demand is so important, for economic activity, right? So as long as that labor market kind of remains resilient, then kind of the economic backdrop should as well. And then we do need to pay attention to what's happening in Washington, because it does have the potential to impact both inflation and the employment situation. With what we've heard from President Trump-elect on the kind of the election trail about kind of immigration policy and potential tariffs. But overall, I think the backdrop is pretty solid.
Yeah. And the Federal Reserve, of course, always in the news. And we've got some interest rate cuts this year. But as we mentioned, inflation is sticky. So do you think they're going to have some flexibility next year, or will they just kind of go from meeting to meeting and watch the economic indicators?
Yes. So, we have seen the Federal Reserve pivot. So they did have cut rates by 75 basis points starting in September, right after holding rates steady, since last July. Now, there is this expectation that they will cut one more time, in today's meeting. But as markets are expecting, kind of the language and the messaging coming from the Federal Reserve to pivot a little bit, suggesting that the pace of rate cuts going forward is going to slow, right? I think they are, as you sort of highlighted, right, they are going to remain, data dependent. And when you think about things, right, there is still a lot of uncertainty, kind of in terms of what's coming from policy out of Washington that is going to potentially impact that environment, right? So I think they are going to kind of start to show a little bit more caution and move a little bit more slowly, kind of as we head forward. But I think they still believe that rates are in a restrictive stance, right, and are looking to cut, a couple more times heading into next year.
Yeah. Michael, thank you so much for your insights. Michael Reinking with the New York Stock Exchange. And have a great and happy new year. We'll see you in 2025.
Thanks so much for having me. And hopefully we'll talk to you again soon.
Thanks.
Enjoy the holidays.